You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is David Smith. He's the senior analyst for the Morgan Report, which you can find online at silver-investor.com. Welcome to the show, David.
Good to be back, Jim.
Yes, you had a little trip to Mexico to check out some silver properties there. And what about silver overall? Can we see a turnaround happening yet?
Well, we're kind of at an inflection point today as we're talking. The Federal Open Market Committee is going to make some kind of a decision about whether or not they're going to keep pumping a lot of money into the economy to try to stimulate it. That's known as tapering if you put a little bit less in. And the current thinking is that if they decide to change the level, in other words, not put so much money in, that would be bearish for the metals. And if they decide to keep it where it is or add to it to try to stimulate the economy, that'd be bullish. But the things that are driving gold and silver, regardless of what happens today, whether the markets are up sharply or down sharply, the things that are driving gold and silver are going to keep driving them for the next several years at least. And so we want to pay attention to this, but also we want to look beyond today, because this is just market noise in the greater scheme of things. And what I've been looking at is what the top-tier silver miners have been doing during this very difficult time of low prices and increasing costs to stay alive and to stay productive and to be able to be there when the next big bull run gets started so that they'll be strong performers. And those are the companies that are the most aggressive in these type of things of cost-cutting and doing other specific things that we can talk about here today are the ones that are going to be the market leaders where the others fall behind or sometimes just disappear. And those are the ones that we want to try to be holding in our portfolios. And also, we're taking a little bit of information risk now to buy them at relatively low prices rather than waiting for them to run out of the gates and then we chase them and pay much, much more for them down the line.
What are the measures they can do to cut costs and yet stay in production, keep their workforce happy? I know in the mining community, if you lose your talented miners, it's very hard to get them back.
It really is, and not only that, they can jump ship and go to a better operation that pays more. So it's really important, and since you mentioned it this way, I'm going to talk to that element first rather than third or fourth down the line, although it's very important. And the idea of keeping your workers happy is tied right in with the idea of community relations, because many of these mines are operating in foreign countries, and of course Mexico, where I was, 60% of all the Canadian resource sector companies have an operation in Mexico. And Mexico is one of the most prolific areas in the world for silver production and gold production. And so it's important that you have good relations with the communities because you're driving across their property, you're leasing or buying it from them, you're impacting the water supply, your trucks going by there are impacting their lifestyles, and also many of the workers that you are going to have in your mines from the mine level all the way up to management level will come from these little communities that are nestled around these mining projects. So it's in the interest of everybody to get along. And what I've noticed in the best mining companies that I've visited, and this particular one that I visited last week, it's my third trip there in 5 years, they're very, very good at being proactive in terms of community relations. It's very, very important. And also in keeping the mining workers that are working in those mines productive and happy.
Does that mean when you're looking at the prospectus of a company, you have to dig a little deeper than just the actual numbers? Take a look at the company's attitude towards its employees, towards its customers. Are they friendly? Are they reserved and won't tell you what's going on? Do you have to look at that?
That's really true, and you can find that out by going to conferences such as the Cambridge House conferences that they have a couple each year in January and May or June in Vancouver. They just had one last week at Toronto. David Morgan spoke there. He's one of the keynote speakers. So you get to talk to management and you find out their attitude toward you as a potential shareholder. Definitely going on site if you're able to visit, like I've had the good fortune to do on a number of occasions, to visit these companies and see just how the workers respond to management and how what the outlook is and the temperature feeling, of the people in the area where these mines are located. In addition to community relations, which are absolutely critical now, because one disgruntled group of people in a small community can put a mining project, stop it dead in its tracks. it's also important for the mining company itself to look at the bottom line and what's called the burn rate, how much they spend per month. And so it means cutting overhead. Sometimes it means letting people go that aren't productive. It means deferring some exploration projects that are going to cost a lot of money to find out if there's anything there at all. It means sometimes putting a mine on care and maintenance so that it can be started up later. And within the mine itself, if you have a mine that's still working, let's say you have a very, like the mine that I was in, I actually was in 2 mines last week, where you go down what's called an incline, and some of these openings are big enough that they drive trucks down there or earth-moving equipment. You drive down the incline, and then you have these offshoots called stopes, which are mined following the different veins. And so some of these stopes are more productive than others. And so when you have a period of low prices, sometimes these stopes that either take a lot of extra work or they're complicated or more dangerous than others due to the structure of the geology, they can put those off for a later date, or they can simply maybe create large blocks of ore there, but just leave them right in the stope and use them later on when prices recover. So these are just some of the ways that a good mining company will rationalize their expenses so that they'll be around for the long haul. No different than a family like your family or my family, where if we have our income is down for some reason and we have a lot of extra expenses, we have to look and ask ourselves, what can we afford? Because we can't afford everything. Only the government, only the U.S. government can do that. They can print money from nothing. If they have debt, they can buy debt by printing more debt. But you and I can't do that.
Darn. So
yes.
I guess I'll have to shut down the printing press.
I guess so. So that's the reality of that. But I firmly believe that gold and silver are going to be much higher as we go out of the next several years. And it's going to be, if it's not this fall, it'll be next spring where we start another major leg up. And it's important for people that believe, as I do, that we have a long ways to go. And it can be frustrating, certainly now, is to be buying these companies that they've researched at prices really that are quite attractive, quite low now. Then don't worry that you're picking the bottom, because nobody knows where that is until later. We hope these lows hold in here, but the point being is, no matter what happens with the Open Market Committee decision today and whether silver goes up or down in a big way today, when you look out a few months and certainly a few years, I think you're going to be very, very pleased at where the prices are, those people that have held on and not been knocked off the bull's back in relationship to where they are right now.
You're listening to HowStreet.com Radio. We'll be back with David Smith right after this.
More and more people are looking to the internet for intelligent, riveting, and thought-provoking interviews. To advertise on the Goddard Report and TalkDigitalNetwork.com, call 604-699-8600, 604-699-8600.
Welcome back. We're chatting with David Smith, Senior Analyst for the Morgan Report. David, let's just pretend the Fed has decided they're not going to taper right now. What is that going to do to the price of precious metals?
Well, nobody can predict exactly what's going to happen, but I think that a lot of what the assumptions are already built into the price. In other words, the metals have been very weak for the past couple of weeks, and the mining shares have given back a lot of the gains that we talked about a few weeks ago. So if for example, things stay pretty much the same, or if there's a little bit of tapering of the amount of money going in, that will probably reinforce that belief, and maybe the metals will move lower. So, for example, as you and I are talking, gold is right around just a tad bit under 1,300, and silver is around 2,140. So, weak on the day here. But the thing is, if it's been overdone and if that's already built into the market, so when that news comes out, if it's what the market's been expecting, it's possible that market participants have anticipated that, and you could see a big turnaround. So it's extremely difficult to predict on an hour-by-hour or day-to-day basis what the prices are going to do, and that's why it's important, I think, if a person believes in this thesis that we will see higher prices for metals and miners, is that you want to try not to just do a gambler's throw, but buy quality miners that are deeply priced lower than they should be, and buy them in tranches, and then you're buying weakness, not strength. So, for example, one of the miners I followed that was at $16 a couple of weeks ago is at $12.50 now. And imagine if you had bought scale down instead of paying $16 and chasing it, if you bought some today at $12.50 or at $12. And so then if it still goes lower, you go, well, I bought a quality company and I have more money to buy more at a lower price, rather than assuming that this is a bottom and putting every cent that you have in. And if you're right, you're a hero, and if you're wrong, you can get blown out of the water.
And you've always advised, don't go all in. This isn't a bet red or black situation. This is a long term, and take a look at the long term. Don't throw your money away just because it might look good for that 1 second.
That's right, and I always think of what Stu said Sue Thompson said in Graceland Updates, buy and sell smaller than is rational. So if I want to buy 1,000 shares of something and I'm really excited about it, I think of what Stu says, and I might buy 700. And the same thing with my selling. I want to sell some into great strength and not sell too much. So it's an art as much as a science, and we don't get it right all the time. But over time, if you try to calm your emotions so that you have that needle someplace near the center between going off to the left or right, obsessively, you'll do better and you'll be more relaxed. And all this market froth won't get you caught up in it. You won't be floating around like a cork bobbing around in the waves. You'll have a lot more stability with some anchors going on, with some emotional anchors, because that is so important. And if you can keep those emotions in check, I really believe that your performance can be, over the short and the long term, can be much, much better than if you just go out there and step in what the herd leaves behind.
Oh, that's a nice way to put it, David. Plus, right now, we still have one eye on CNN and seeing if Wolf Blitzer is running down the hallway to the Situation Room. Syria given a very short period of time to gather up its weapons of mass destruction, its nerve gas, and so on, and hand them over to the Russians. I'm sure investors are very nervous. Can they pull off the deal? I call it the Putin solution, but if the Putin solution doesn't work, it's going to be shooting for Putin.
Well, the Middle East is going to be in an uproar as long as you and I are around, and probably a long time beyond that. But the thing is, what I like to do is focus on the things that are going to directly impact over the intermediate and long term the investment that I have, which now is heavily weighted in the resource sector, and that has to do with what I think the world economy is going to look like, what effect that's going to have on copper prices and production. And as you know, 2/3 of silver production comes from copper base metal production, and so that can impact the amount of silver there. The mine that I visited and several that I have visited in Mexico are primary silver producers, and they're fairly rare. There are less than 24 companies in the world that actually their primary product that they produce is silver, as opposed to being a metal that comes as an offshoot of copper, lead, and zinc production. And so these companies are very sensitive to the silver price, and they tend to have as much volatility as silver does itself, since they're so centrally correlated with it.
In Mexico, we know we have the problem with the drug cartels and rampant violence. Are the silver mines far enough out in the countryside that really that's not a factor for them?
Well, the cartel involvement is really pretty much throughout Mexico. I mean, through these different areas, there's some more than others. The companies don't talk about these things a lot, but they have taken security precautions as much as they can to protect the workers and to protect the transshipment of their concentrate or their doré bars. And these things, this is part of what you pay attention to. And there's crime everywhere in the United States. You don't be paranoid about things, but you pay attention. And there's certain areas of town that are more dangerous than others, and that's true of Mexico. But you can have issues even by some of the major resorts areas like Acapulco and Cabo and places like that, where there's sometimes there are real serious issues with the cartels. But you just try to do the right thing and keep a low profile and treat the locals well and this sort of thing, and generally you'll be okay. So it's so far so good.
How are we doing in South Africa? Still problems?
Haven't been talking too much about that lately. There have been a couple gold contract settlements with workers, but the systemic issues remain in Africa. And something that I just learned the other day is about how much of the platinum palladium is mined in South Africa is actually done by hand because the veins are so narrow. And so a lot of the mining takes place by the workers crawling in these very small openings and taking, digging the stuff out pretty much by hand, and that's why it's so labor intensive and so dangerous. And so this is not conducive to putting large supplies out there. And with the social unrest that you have in South Africa and the issues of possible nationalization and more costs for electricity, it's going to be very, very difficult for a number of years, I believe, for South Africa to ramp up production of platinum in any meaningful sense, and that's going to strengthen the bullish case of the supply-demand shortfall that we're seeing already in platinum and palladium, and will probably get much, much more severe going out over the next 2, 3, 4, 5 years.
As we know, those are industrial metals, not just pretty pieces to put on a ring or on a watch. Every car's catalytic converter, needs those precious metals to work. And in China, where they sell 50,000 cars a day, you can see how that could put a big strain on that supply.
Right, and I've recommended this site a couple times before. It's a Canadian site, and I think people that really enjoy to read fresh thinking on the resource sector and also read about some of the biggest names in the business, like Frank Riestra and Robert Friedland and some of these other people that have really been and done. It's called CEO.ca. And I was reading just a couple days ago an interview with Robert Friedland, who discovered this the massive Oyu Tolgoi deposit in Mongolia, and how he was on his 153rd drill hole. He had $100,000 in the bank left, which is nothing really for a company that's drilling. That's one drill hole, and they hit it big, and this thing could be worth $400 billion. But anyway, he was talking about the increased use of platinum and palladium, and he was mentioning that they're working on a hydrogen-powered car in Japan, and he said that it doesn't use ounces, it uses pounds of silver. And I haven't read anything more about it than that, but I felt that to be very intriguing. And so you're going to see, regardless, you're going to see more platinum and palladium being used to clean up the environment in China. And I have maintained for almost 2 years that the big move in the metals, the precious metals, is going to come first in the PGMs, and they're going to move first based upon their own metrics, and they'll be followed by gold and silver on their own metrics.
Metals to watch as we go into the future. Thanks a lot, David, for chatting with us.
Great talking to you today, Jim.
My guest has been David Smith. He's the senior analyst for the Morgan Report, which you can find online at silver-investor.com. You're listening to HowStreet.com radio. Find us on Twitter at TalkDigitalNet. You can contact us at info@HowStreet.com. I'm Jim Goddard.